Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Well, g'day, once Liam. Garman here, managing editor of real estate at Momentum Media, the team that brings you the Smart Property Investment Show. And today we're going to be unpacking some of the major news that has happened over the last few weeks in Australia's property market. And of course, there's a lot to talk about. Of course, you can't go more than a day without scrolling through the news and seeing quite a lot of coverage around property. And to help me go through this, I'm joined by our journalist, Sebastian Holloman. Welcome to the podcast.
Happy to be here. Thank you.
And this is your first SPI podcast.
First SPI podcast.
Unpacking all the big news.
Long-time listener, first podcaster.
Oh, see, yeah, good. See, I love when people drop that line in because it's a bit of fun. But let's get into the big news of the day. So, obviously, it was only a few days ago that the Prime Minister was grilled over potentially getting rid of negative gearing. Sebastian, talk us through that. What happened?
Yeah, so basically the Prime Minister and the Treasurer, they've said that the Treasury are considering options, obviously, to change and scale back negative gearing and capital tax. And that's ruffled a lot of industry feathers because obviously the Prime Minister had previously said that they weren't going to touch it, that they were going to leave it as be. And they're going back on that. And there's just a lot up in the air right now, obviously, with the Help to Buy scheme going on. And yeah, a lot of discussions just about what that's going to look like, the possible ramifications, and yeah.
Of course, there's a lot of discussion. And the coalition didn't seemingly wait a beat over it. We had the Shadow Treasurer, Angus Taylor, the same day release a press release calling it a tax on housing, saying that the removal of negative gearing is a tax on housing that will decrease supply. Now, the government's come out and said, despite these criticisms from the Shadow Treasury, that it is just a routine thing, that Treasury often examines and researches the big questions of the day. And this seems like a reasonable point. The Greens look like they're going to be potentially in a pole position, especially in the event of a hung parliament. If we are in a hung parliament, Labor might be looking to a coalition with the Greens to continue governing. I think that the notion of the Treasury examining it because it's a routine big macroeconomic question seems about right.
Yeah, I think honestly, the whole situation is just there's a lot of moving parts to it. Obviously, we're in the midst of a housing crisis, we're in a rental crisis, and I think we just really need to evaluate all the options that we can, and we need to just really look at everything at our disposal.
Absolutely. And with that, obviously, there's been a lot of research that's come out on the other side of the negative gearing question. And one thing that you picked up on this week was that modelling from Deloitte showed that the removal of negative gearing could potentially reduce the number of homes being built by 4%, which is absolutely huge.
Yeah, so that's quite a huge figure when you just think about like the total housing target. And it's interesting that you mentioned that Deloitte modelling is that obviously we covered that earlier, that the Prime Minister is aware of that Deloitte modelling. They said that they've considered that, and seemingly they're still going ahead, obviously, with that review. So I think that begs the question as to what's really going to happen on that front. Because 4%, that is a huge amount of housing. Like, you just can't really underestimate that. And we're already falling behind on that housing target. So we really need to pull out all the stops so we can just get more houses being built.
And that, of course, is the National Housing Accord, which, what were the statistics? It was a reduction, 200,000 behind at the moment?
Yes, I believe. So we're currently building 160,000 homes against the roughly 240,000 homes that we need to be building each year.
Each year?
Yes.
Yep. And that's to hit the 1.2 million by the end of the decade?
Yes, so that's the 1.2 million.
So we're going to be several 100,000 short?
Yeah, so that's the thing, is that just like with every year, like every month even, just when we're falling behind on that target, it's just adding up. And I think we really just need to sort everything out together because we just need to put our best foot forward so we can just deliver more houses.
And of course, it makes mathematical sense given that, projections are anything to go by. We're going to be having an immigration rate of 400, 500,000 a year. Now, that figure that you'll give me on the several 100,000 homes being built, that's probably not even enough to meet our current immigration statistics.
Yeah, because obviously those figures are just always in flux. There's always lots of changing conditions. There's lots of changing figures that are just happening with that. So yeah, it's just, I don't even think necessarily that may not fully illustrate the exact like picture of the scenario. So I think that it really emphasizes the need for us to really figure this out, look at the reality of it, and just do what we can in order to get more houses out there.
Now, on the flip side, so the Treasury is examining negative gearing, but they're also examining capital gains tax. Obviously, of critical importance to investors. If you do have a point at which you increase capital gains tax, then you're taking money out of the market. If you've got investors that are investing in these new builds, and new builds are absolutely critical. We have new builds without a rental investor, without someone investing in the housing market, you can't have rentals. That is the definition of it. So you need more investors to come into the market to ease rental prices. But at the same time, Treasury's examining capital gains tax, which in the sum of things very much puts people off investing in property. It puts people off investing full stop. If you are potentially going to take more of realised capital gains from the back of people's pockets, that opportunity cost just isn't there to put your money in the property market, which is also quite concerning. Now, we also have reports coming through that taxes in Queensland are also slashing the number of new dwellings coming online there.
Yeah, so not only dwellings, but also just jobs. So there was a recent report that was done by the Property Council of Australia and the Queensland Economic Advocacy Solutions that's revealed that 33,000 new homes and up to 37,000 jobs have been lost because of these taxation policies over the last 8 years. And I don't even think I need to say that that's huge.
There's been I note on data, there's been a 30% jump in Queensland's property price over the last 12 months. Do you think that they could potentially be linked?
Oh, absolutely. I think that a lot of these policies, obviously, when there's less money going into it, it's just there's less incentive for investors to get in there. And that has a lot of like knock-on economic effects. And yeah, when there's less money going into it, that just means that prices are going to go up.
Naturally. So the taxes took the form of Queensland's additional foreign acquirer duty, AFAD. Quite like that. Good little acronym. The AFAD. It does roll off the tongue, which is an 8% surcharge on stamp duty, and the foreign land tax surcharge, which is a 3% surcharge on land tax that foreign investors have to pay on top of their regular taxation. Now, it seems a summative thing. It's a summative thing that if you're going to have potentially 4% reduction on the development of new homes as a result of negative gearing, if you have, if we're not already meeting our National Housing Accord targets, already several hundred thousand behind, and we do have these restrictive taxes here, it seems that we're potentially in a bit of a bad situation for future development.
It just doesn't mesh very well together. I think that it's interesting because these two things can be very dovetailed together. We need to make circumstances and conditions as favorable as possible in order to just get more houses to be made. So I think that with these taxes, that's what a lot of the industry bodies have been saying, is we need to just make conditions favorable. We need to make it so that investors will want to come in and build these houses.
Absolutely. We're going to go to a quick break, and when we're back, we're going to continue unpacking the major news in Australia's property market. But we'll be back in just a second. And we're back. Liam Garman and Sebastian Holloman, the team at SPI, at Momentum Media. And just before the break, we were looking at how negative gearing might negatively impact, well, I think the data is not saying might anymore, will negatively impact investing in property, and how restrictive property taxes has reduced the number of new homes being built in Queensland. Now, there might be a little bit of conjecture there. So let's look at the hard data. Let's look at the number of dwellings that are being approved going forward, because that is a great metric of looking at housing supply and whether there's going to be more houses that will potentially alleviate the price of property, or if there aren't enough, make it a very lucrative investment. Now, data this week has indicated that approved dwellings have fallen by 6.1% over the month of August. Now, according to the Master Builders Australia, Shane Garrett, This is actually down even on last year, with the volume of approvals, in fact, lower than a year ago. Now, we understand that the government's National Housing Accord is for the development of 1.2 million homes. 1.2 million homes, that's by the end of the decade.
Yes.
So by 2030 or by 2029? By
I believe
2029.
2029.
By 2029. So at this current rate of approvals, there's going to be a 365,000 house shortage. It's pretty astounding. 365,000 house shortage. So of 1.2 million homes that were projected to be built, we're only going to build 832. Put your money where your mouth is. Putting the money where the data is. That looks like there's probably not going to be an absolute glut of supply coming online, Sebastian.
No, because I think obviously with this is empirical data that's showing like this is the meat and potatoes of getting to that housing target. And I think that if the numbers aren't there, then that's really showing that we need to do something. There needs to be reform in order to better incentivize building.
Of course, and we already know there's trade shortages outside of this. So this is just approved dwellings.
Yes.
But a lot of Australia's peak bodies have already come out saying, well, they've got a massive trade shortage. I know that there's been numbers floating around between 70,000, 90,000 trade shortages. Ironically requiring a greater intake of skilled migrants from overseas, but then requiring, ironically, more houses. So this is before factoring that in.
Yes, it is. And I think that it's also on top of resources, it's just materials where it all kind of loops into each other. It's a vicious circle.
Because, of course, labour market bidding, we're seeing quite ferocious labour market bidding, especially as state governments across Australia are increasing their civil infrastructure. In Australia, in New South Wales, we've gone on a massive civil infrastructure build. We had the opening of the new metro. We've had WestConnex. We've had a litany of builds which are drawing from the same pool of trades as housing is.
Yes, I mean, we have the upcoming Western Sydney Airport as well.
Absolutely, yeah.
Yeah, there's a wealth of infrastructure being developed.
And that's right across Australia. We've got the Olympic Games in 2032 in Brisbane.
Oh, absolutely, yes.
I can imagine the demand on skilled trades that would be taking.
There's already infrastructure being built, like in anticipation of that, and yeah, like there's not much time. The clock is ticking, really.
Absolutely. Now, talk us through, in New South Wales, we have seen some new laws, some new regulations around renting, given a lot of our investors are property investors and people interested in entering property development and interested in entering property investment. Talk us through. What are we seeing?
Yeah, so early last week we had the New South Wales Premier, Chris Min. He announced the New South Wales government is going to put forward legislation which aims to make it easier for renters to have pets in their homes. So basically with that, so the legislation hasn't yet been tabled and introduced into Parliament, but this is pretty big because essentially what these laws are going to do, it's going to ensure that landlords can no longer automatically say no to a pet in a New South Wales rental. So this has been like a big talking point for the Labor government. They've talked about it for a while, and it would represent quite a radical shift from the state's current laws, which they do not ban landlords from including clauses in a renter's lease agreement to restrict them from owning pets.
So what do those clauses look like?
So basically those clauses, landlords, they can't say that they can't have a pet. That's basically, they can't do that. But they can basically include clauses which will disallow renters from having pets.
So that's from a series of approved
reasons? Yes, basically. Yeah, so it's a bit of a roundabout process. But basically, the effect of this is pretty big because that's not going to be able to happen anymore. So basically, in order to, if you as a landlord, you don't want a pet in your rental property, you're going to have to go to the tribunal.
Yeah. So you have to actually have a reason.
Yes,
from a
so you have to have
number
a
of reasons.
Yeah. So obviously, details around this are like all very hazy because the legislation hasn't yet been. I think it's in the process of being drafted before it's eventually submitted. But Premier Minns, he threw around like a couple of different things. He said that the legislation might be similar in model to what is currently in Victoria, Western Australia, and what is currently being proposed in Tasmania. And he basically just illustrated that he wants to bring New South Wales in line with the revisions in all of the other states and territories. Because New South Wales is pretty late to the party in terms of incorporating this reform. They've held on that for a while.
Well, I'm in two minds about this because ultimately, this is private property, and it should be up to the discretion of the property owner to a point to say, well, I can't necessarily have this destroyed, or there are going to be areas where having pets is just not going to work.
I think that in obviously the address that he gave about like these upcoming laws, he gave a couple of reasons of which landlords can refuse like pet ownership from tenants if it exceeds the reasonable number of animals on a property, or if the property itself is unsuitable for pets.
Okay, so they've already addressed that.
Yes.
Okay, so they've already addressed that.
So he's thrown that out there, and obviously we don't know what that's exactly going to look like. But I think there's a number of sides to it, and I think there's a lot that's going to have to be hashed out, and it's going to be an interesting area to focus on a bit more. So
no German Shepherds or golden retrievers in a 50 square meter apartment, potentially getting a few strata complaints.
And ultimately, that's not good for the animals either. So I think that there's a very fine line with all of that. And I think that it's going to be interesting to see how that works out, if it resembles what is in the other states and territories. So
that's just streamlining it. Now, I believe that is all we have time for. Just a quick news wrap from the team at SPI Momentum Media. Thank you so much for joining me today.
Pleasure.
My name is Liam Garman. That was Sebastian Holloman. If you do want to reach out with any news or any stories regarding property investment or your journey in property or any insights that you might have, which the team at SBI would benefit from, but also other property investors across Australia, please do reach out at liam.garman. Not like the watch, not like the GPS, Garman, not IN, A alpha N at momentummedia.com.au. But that is all we have time for this week, and we'll be back very shortly with another SPI podcast. But until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.